ever questioned if it makes sense to purchase Tesla shares at this time? The question of whether Tesla is still a good investment has divided experts ever since the company revealed its production and delivery figures. You would not want to miss this if you were interested in learning the solution to this. There never seems to be a quiet moment at Tesla, especially in relation to Elon Musk, the company's controversial CEO. Musk is nearly always in the news, whether it's because he's sending multiple satellites into orbit to increase the reach of his space-based global internet service, building a new auto manufacturing facility, revealing a new model of a Tesla electric vehicle, or creating more waves on Twitter. Would you like free stock? Then pay attention. Moomoo created the industrial chain, a new function. Let's say you wish to discover which stocks might change over the next several days or months. You will greatly benefit from the industrial chain. It offers a thorough overview of the hottest sectors, such as semiconductors and electric vehicles. Finding stocks quickly, either upstream or downstream, allows you to concentrate on specific industrial segments more rapidly. Additionally, since segments and industries are related, you could forecast price changes more quickly without having to read a lot of research papers to understand the relationships inside a single industry. In the description, a link. Elon Musk, the CEO of Tesla, said that the company's manufacturing efficiency might be its greatest competitive edge during the company's annual shareholders meeting in August. But he also mentioned that robotics driven by AI would present one of Tesla's biggest long-term prospects. By the end of this year, Tesla might reach a production run rate of 2 million cars, and he restated the objective of producing 20 million cars by the end of the decade. In terms of value, Tesla may seem expensive to most investors, but the business has consistently shown strong revenue and earnings growth over a number of quarters. Furthermore, the company's growth trajectory is still very much intact, according to yearly earnings predictions. Tesla reported that it has shipped 254,695 electric cars worldwide in the second quarter. That missed FactSet projections of 264,000 in the second quarter and decreased by 18% from the prior quarter. The prolonged coronavirus closure in China was one factor contributing too. The slowdown building production facilities in Austin and Berlin also posed challenges. However, deliveries compared to the same period last year increased by 26.5%. Over 365,000 vehicles were produced and over 343,000 were delivered by Tesla during the third quarter of 2018. As production volumes rise, Tesla claims that it is getting more and harder to find vehicle transportation capacity at a fair price. As a result of the company's transition to a more equitable regional mix of vehicle manufacturing each week in Q3, according to Tesla, there were more cars in transit by the conclusion of the quarter. In a recent article, Barron stated that good news for Tesla investors, the stock is now oversold, published weekly by Dow Jones & Company, a News Corp subsidiary. Barron's is an American magazine newspaper that covers market trends, pertinent statistics, and U.S. financial news. Clarence W. Barron started it in 1921 as the Wall Street Journal's sister journal. The article claims that even though the bulls have been hurting recently by the extremely harsh recent run in Tesla shares, they may soon be receiving some respite. Clinical psychologist Jordan Peterson, a Canadian author, television personality, and emeritus professor at the University of Toronto, advised people to buy electric cars if they so choose rather than diesel-powered emergency backup vehicles or electric power generators. Investing in Tesla stock is perhaps the greatest option in this regard. Undoubtedly, one of the world's most inventive companies is Tesla. As consumers turn to electric vehicles to counter rising gas prices, the company is expanding quickly. Despite the fact that Tesla had a difficult second quarter, the business seems to be in control. All things considered, even at the new gigafactories, production was significantly impacted by problems with the global supply chain and growing costs of raw materials. Lockdowns hampered both consumer demand and production at its Shanghai plant as China carried out its zero-COVID policy. Despite this, Tesla produced $621 million in free cash flow and increased second quarter sales by 42% year over year. Additionally, Musk stated that the Tesla Cybertruck should still ship next year and that deliveries of the Tesla semi-truck might start as early as this year. Beyond that, when expenses are cut, a less expensive TV is anticipated to be added to its product lineup. Production is likewise being increased by Tesla's energy division. In addition to growing battery production to support the growth of Tesla's vehicle manufacturing, the business has been increasing the manufacture of solar systems and battery storage, which it sells to customers separately at its gigafactories. According to the company's second quarter report, it is still increasing the production of megapack storage units because client demand is still high and far more than our pace of production. While we wait for a more thorough Q3 financial report, Tesla has already released its Q3 delivery and production figures. Many are concentrating on the fact that Tesla seems to have increased manufacturing, despite the fact that most have been disappointed by this. The company's valuation, nevertheless, is a source of pain for investors. With this year's earnings assuming, as analysts expect, that earnings in 2022's second half will average 50% higher than those in the first, Tesla's stock is currently trading at a price-to-earnings ratio of roughly 75. On the one hand, Tesla is attempting to reduce expenses. In fact, Tesla's head of investor relations, Martin Vita, stated at a recent investor conference that the company's cost per vehicle was $84,000 in 2017, but has since decreased to $36,000. If that pattern is maintained, Tesla will be able to enter the more affordable EV market, which should contribute to the EV industry's broad adoption. Additionally, Tesla recently revealed in filings that it is considering the possibility of constructing a lithium hydroxide refining plant on Texas Gulf Coast. That would be an additional means of cost containment and supply chain optimization. According to the business, commercial operations might start in 2024's fourth quarter. Should the project proceed, Tesla may also be able to take advantage of the incentives provided by the Inflation Reduction Act. Since the new law reinstates certain tax advantages for buyers of new electric vehicles that had expired, Tesla has already benefited. The prior cap that terminated those credits once a firm sold more than 200,000 vehicles has long since passed for Tesla. More of its supply chain located in the United States and more affordable car models will also aid in meeting its eligibility requirements. Nevertheless, many think Tesla has a bright future ahead of it. Even though a P above 70 indicates an exceptionally high value, investors looking years or decades down the road won't find the firm to be so rich if it grows at or near 50% for a number of more years. Purchasing a Tesla at this time may be wise. To find out the precise performance of Tesla stock, visit link. Long-term optimistic investors hold out hope for completely autonomous cars. Even while dozens of businesses are, in one way or another, pursuing that goal, Tesla's lead is hard to overcome. For years, Tesla has been developing its use of cameras, radar, and GPS to the point where its cars are essentially self-driving. Goldman Sachs says that investing in Tesla stock in March is a smart move. To go green, Goldman Sachs selected Tesla and a number of other EV-related equities. Rising oil costs and the path of inflation, the majority of the equities have an upside potential of at least 50%, according to the bank's experts. In reality, innovation in electric vehicles will continue to propel investment growth in 2022, predicts Goldman Sachs. Goldman Sachs declared in 2016 that the moment had come to purchase Tesla stock. Goldman Sachs declared in 2016 that it was time to invest in Tesla Motors following 3 years of telling investors to wait for the company. Tesla shares increased in early trading that year when the large investment bank raised its rating from hold to buy, keeping a $250 price target. Prior to that, in February 2013, Goldman had last given Tesla a buy recommendation with a $45 target price. Despite the stock's increase, Goldman Sachs analyst Mark Delaney thinks Tesla still has room to grow. Following a discussion with Martin Vita, Tesla's head of investor relations, Delaney offers his opinion. Delaney stated a price objective of $333.33 in accordance with that, reaffirmed their buy recommendation, and projected a plus 22 movement in the stock price. A Goldman Sachs analyst maintained Tesla's buy recommendation and stated that the business will continue to benefit from the long-term shift to electric vehicles, even after Tesla reported lower than expected manufacturing and delivery numbers. Research analyst for Deutsche Bank Emmanuel Rosner was generally more optimistic about Tesla. The company is sticking to its $400 per share price objective and thinks Tesla is one of the best stories in the auto industry. If you want to receive updates on Tesla stock, be sure to subscribe to this channel.